Friday, June 10th, 2022, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at the Daily Telegraph. They're warning, one of their writers has warned that an economic collapse in the UK could bring anarchy to the UK, much like we've seen in Sri Lanka. I'm going to give you my opinion on that. Before I start though, I've been warning many people, even before I started making my videos on this channel in late 2015, that we're going to have inflation or even hyperinflation. And I've been warning my friends, family, colleagues, all the way back to, 2002, when I read Ben Bernanke's helicopter speech. And one of the ways I've tried to protect my savings has been through gold and silver. And I know gold and silver seem to be frustrating right now in terms of price move and in terms of what we're seeing in the markets and inflation. But we need to look at the bigger picture. Gold is up about 12% in euros, for example, year to date. It's up almost 10% in terms of British pounds. It's up just about 1% in US dollars, while the NASDAQ is down over 20%, S&P down 15%. Yes, it's not raging ahead like crude oil, but eventually it will. And that's why I think if you can still get gold and silver, and this is not advice, but if you're on the fence, I think it's more important than ever getting a little bit of physical gold and silver. Silver, I think, will do really well because it's very undervalued. And many of you, of course, ask me where can I get it? And I tell you, do your homework, search for the best dealers or best deal online. But I also have my promo code with Gold Investments. I highly recommend them. They will match any price out there in the UK. My promo code is Monaco64. You can also buy gold through the GlintPay App. There, of course, they're holding your gold. It's a little different. They're holding it in a vault in Switzerland in an allocated account. My referral code is MarioGlint79. Yes, so on with anarchy. So I've been warning, of course, as I said, many people over the years, almost, literally 2 decades now. And I've even been warning people like Mervyn King, the former governor of the Bank of England, or Lord King. And you might think, what are you talking about? Well, I'll show you what I'm talking about. Last August 24th, 2021, I sent an email to the office of Mervyn King. You can find his email publicly, officeofmervynking.com. So the header for my email was QE, a dangerous addiction, ? And I wrote, Dear Lord King, I have gone through the Economic Affairs Committee report with great interest. So this is a report he wrote for the House of Lords. He was the head of the committee at the House of Lords. I have been warning as many as possible since the 08-09 crisis that QE would not be able to be stopped and that it would continue until it destroys the national currency. So yeah, we can take a lot of the troubles we're seeing now back to 08 because they didn't fix anything. They just threw a lot of funny currency at it. They didn't reform the banks. They didn't ban OTC derivatives. So this has got nothing to do with a leader of a country, and you know who I'm speaking about. If we had allowed the banks in the UK to fail like Iceland did and reorganize the system, we would not be in the pickle that we're in today. I know you were in charge at the time and understand the political pressure you were under, so no hard feelings. I have read your book, The End of Alchemy, which is over there, and agree with you on the question of separating banking into 100% deposit banking and 100% investment banking, where equity finances businesses. One of the reasons I have held my views as far as QE is concerned is that I read Fiat Money, Inflation in France by Andrew Dixon White back in 2003, after the Ben Bernanke helicopter money speech, which made me believe that was the road central banks would take in the next crisis. If you have not read Fiat Money in France, Inflation in France, here's the link to a free PDF. Kind regards, Mario and Echo. And I got a reply, not from him directly, but from his secretary. Dear Mr. Marianeko, Lord King has asked me to thank you for your email, which he has read with interest. Best, Rachel. So, and it continues my correspondence with Lord King or his secretary. So this is from May 26th. And this is in relationship to an interview he did recently with Sky News, which I've spoken about here on the channel. I said, Dear Rachel, I have recently listened to Lord King's interview with Sky News on May 20th, 2022. I am based in London and worked in the city of London for 20 years and have been making YouTube videos since 2016. Warning my viewers about inflation and our current fiat currency-based monetary system. I would love to talk with Lord King on Zoom about the current state of play, as I can see that he's worried about the way things are going. I have over 60,000 subscribers, and even though we are critical of central banking, I feel my viewers would appreciate hearing from Lord King. I look forward to hearing back from you. Kind regards. And I got a reply the same day. Dear Mario, I'm afraid Lord King's diary is full and he isn't taking on any more commitments. So in the Sky News interview, of course, he warned the Bank of England that they've fallen behind. They need to raise rates, right? So I have been warning even people like Lord King. Maybe one day he will want to come on the channel. Maybe one day when there's anarchy on the streets of the UK, which I think is a little bit exaggerated. I'm not sure we're going to get to anarchic conditions. And by anarchy, I mean no law and order. I don't mean the good kind of anarchy where an individual runs his own or her own life. But who knows? The UK and Western Europe and the US, we've had relatively peace, prosperity since World War II. And I think there's very little between what we've had for 70 years and anarchy, and the money or the currency is so important. And I think the only thing holding us right now is that most people still have faith and confidence in the system. But one thing that is worrying me right now is how fast government bond yields are rising, or interest rates. And that's very important. And why? Well, because it sets the price of currency and credit. And we are a highly indebted society in the West, US, North America, UK, European Union. And we need cheap credit. And when governments in the West spend more than 50% of GDP and the cost of them of financing things is going through the roof, there is a very big danger of what Ben Wright here talks about. So I'm not making this up. I was surprised to see this article yesterday. Watch out, Boris. Recession and the fuel crisis can quickly explode into anarchy. Sri Lanka's precipitous decline into economic chaos is a stark warning to countries around the world. I'm not going to read through the whole article, but I've read it. I'm going to put a link below in the description through archive.ph, so you don't have to pay for it. Basically, he's saying Sri Lanka it's been living beyond its means, borrowing, spending, doing infrastructure projects. And then all of a sudden 2020 came, you had the Ukraine war, everything got out of hand. And you can say the same thing about the West. I mean, since '08, we've lived beyond our means. We bail out billionaires or millionaires in the city and Wall Street. We live, governments are borrowing and spending. We've got even more debt, I would say, than Sri Lanka. So he's in a way right to warn the current regime here in the UK. And the worrying thing as well is that recently Boris Johnson, with the no confidence vote, he won that, but weakened his position a lot. So now he wants to pump in more funny currency to keep people happy and to stay in power. He said he wants to help people buy their own homes. Don't know where he's going to get the money or currency from. So, yes. I mean, I grew up in Brazil in the 70s, or I don't remember the 60s that much. I was too young, but 70s and 80s. And we had a lot of inflation, hyperinflation, currency collapses, but we never really had anarchy in the streets. So I think the chances of getting anarchy in the UK are slim, but who knows? And just wanted to show you some more things about what's going on here in the UK. The other day I went into the city to have lunch with my friend and actually bought a paper telegraph to read on the train. And the news is not good. It says national fuel crisis as price at the pump hits new high. And I can tell you that's true because I filled, I put some more diesel in my car yesterday and it was over £2. And the funny thing, or the strange thing, is that I try to keep the tank almost full these days because I know the price is going to keep going up. And that's how currency collapse occurs, because people wake up and they try to spend as much as they can because they know the currency is going to be worth less and less. So here you go. And then there's another story here, smaller story. It says, but I think it's important, shoppers cut back as bills up by third. So discretionary spending is plummeting in the UK. So there you go. And yes, the ECB, we're going to talk about that in the Mike and Mario show, but they're having a tough time because they've got inflation. But at the same time, bond yields in Italy and the peripheral countries are going through the roof. So I'll wait until I talk with Mike later on. I would say what we're getting now is payback time. And you have to go back to the Blair government, the Labour government from the mid-90s or late 90s up until today. I always remember listening to Gordon Brown give out his budgets when he was chancellor. Billion here, a billion there. And I even told friends at work, we're going to end up bankrupt like this. And people thought I was crazy. And then came '08. The Labour government bailed everyone out. The banks, savers, homeowners. It wasn't just the banks. And the new government, the conservative liberal Democrat coalition, they kept the program going and they haven't stopped since. So, yeah, years of deficit spending, years of credit binging, I think it's coming to an end. And the rising bond yields show me that people want their pound of flesh, so to speak. So with that, let's quickly look at where the markets are this morning. It's 20 to 9 a.m. London time. Yes, I spoke about how gold and silver, even silver, are outperforming the stock market. Gold, of course, is outperforming the dollar. So yeah, the dollar has been strong, but gold is outperforming the dollar by about 1 to 2%. Isn't much, but I think what gold is showing right now, that it's very stable, while everything around it is mad, goes up and down like a yo-yo, right? And eventually I think people will twig onto it. A lot of other investors, not just us gold bugs, so to speak. And yes, not a good day for the stock market yesterday. So where are we today? Well, we've got spot gold down about $1 at 1847. High's been 1850, low 1843, a relatively narrow range. Silver's up 4 cents at 21.72. Range has been 21.59 to 21.75. Stock market is fairly unchanged actually, so I won't even go over it. So except for the NASDAQ 100, which is up 25 points. The FTSE is down 65. Just under 1%. The Euro Stoxx 50 is down 1.3%. To the currencies now, sterling is down slightly at 124.83. The euro had a wild ride yesterday. It was strong while the ECB press conference went on. The ECB sounded very hawkish. They're going to start raising rates in July. They're going to stop net QE. But then I think Lagarde said something about bond market fragmentation, which she says is not good, which means she's ready to bail out Italy. We'll have to see if the markets test her. And Italian bond yields have continued to go higher, by the way. Right now, the 10 years at 375. Remember, a few days ago, we were at 340. The key level there is 385, I would say. The dollar is down about 0.2% versus the yen at 133.44, and the dollar is down 1/3 versus the Swiss franc at 97.72. The dollar is down slightly versus the yuan at 669. Let's check out the ruble. The ruble is at 58.40, so the ruble is very strong. I guess it's a commodity and gold backed currency right now. I know they withdrew that 5,000 rubles per gram thing they had with the central bank there, but just the fact that they did that gives investors confidence, I would say. To the rest of the currencies, Aussie dollar is up 0.5%, 71.40. The dollar is unchanged versus the Canadian dollar, 127.00. And the Kiwi dollar is up 0.2% at 64.30. To the general commodities, WTI crude is down 0.5% at 118.95. Brent crude is down 0.5% as well at 121.31. And high-grade copper is down 0.5% at 4.36. Nat gas, U.S. nat gas is at, well, just below $9, up 0.2%. And to quickly finish off, the 10-year yield is at 3.02. It's down 2 basis points. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And I wish you all a great day. Take care. Bye.